Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast. Let's talk about WTI crude oil. Matt just called it out. We're down. We hit $80 a barrel yesterday on WTI crude. I don't know where this is coming. So let's bring in some people.
And it was fast, right? We went from 70 to 80 very quickly.
Exactly. We were below $68 in late June for WTI crude. Now here we are at 80. Go figure. Mike McGlone, though, he knows what's going on. So does Fernando Valle. They are both analysts covering the energy space for Bloomberg Intelligence. Hey, Mike, let's start with you. You're down in balmy Miami, Florida. How is it now, tough guy?
It's actually cooler here than you are there. Your high yesterday, I think, was in the high 90s. Ours is in the low 80s. So you got to come south to cool off.
All right, buddy. How did we get here with WTI crude oil at $80 a barrel?
We were at 70 at the beginning of July. So within a month, we're up $10.
So let's look at it in the year. It's unchanged, basically. Still actually down in the year. So it's basically bouncing from getting too oversold. But look at the macro big picture. What we did last year was one of the biggest pumps on a 2-year basis ever. And it's in the back end of that. And the history of these things are very bad for crude oil, particularly if you have the Federal Reserve still tightening and disappointing data out of China. Those are current trends. So I'm still very bearish crude oil. I see it at the upper end of the range. I still think it's more likely to head towards 40. And right now, one key thing that's really mattering for everything and virtually all risk assets, most notably copper and crude oils, the U.S. stock market basically has to keep going just for these markets to stay stable. So that's the problem. If stock market actually drops a little bit, these assets are probably going to continue reverting last year's pumps.
So that's the trader perspective, Fernando. What do we know about supply and demand here?
Well, on the demand side, of course, Northern Hemisphere summer. Paul's driving more to the shore.
Yep.
They're driving a little bit more consumption, but it's been slightly underwhelming on the last few numbers of the EIA. In July, of course, you had the start of the Saudi Arabia, the additional cuts that they promised in the last OPEC Plus meeting. So that's probably sapping a little bit on the supply side. But when we look at the inventory figures, it hasn't changed drastically. It's really been this whole, all right, we're coming to a soft landing in the economy, which Mike is just showing that the current data is not really pointing towards that direction. But there's an expectation that the soft landing is what will really push us over the edge, and that's likely what's driving oil prices higher. That and the OPEC plus cut, at least in the short term.
Exxon kind of missed numbers today. How do you do that if you're an energy company? I could make money as an energy company. What happened to Exxon?
They made money, and to be fair, they told you they came right in the range that they guided.
Okay.
4 weeks ago. It's just consensus a little slow to update sometimes.
Okay.
Analysts are a little stubborn. You wouldn't know anything about that.
Of course not.
But they still generated significant free cash flow. Not enough to cover their buybacks, but they generated enough free cash flow. The good thing is they came into the quarter with almost $33 billion in cash. The net debt to EBITDA under 0.2 times. It stayed at that level. So they can still get to that $35 billion of buybacks by the end of 2024. Of course, that will probably mean higher leverage unless Brent goes above 85.
Mike, how do you play earnings as a trader, or do you? Give us some trader insight for those at home that want to play along. I mean, when an earnings season comes around, usually analysts are lowballing, right? But in this case, as Fernando points out, they haven't caught up with the forecast cut that we got out of Exxon. How do you play? Is it an opportunity earnings?
Well, the key thing to remember about energy equities versus underlying energy measures as measured by the Bloomberg Energy Commodity Index is the equities typically outperform, and that was definitely the case last year, and it's still been the case this year. The key thing is you look at the XLE, that's like the major ETF that tracks energy prices. They're up. It's almost up, almost the same thing as the S&P 500. So that's the key thing to remember. The energy equities can create more with less every day, and the actual underlying commodities are succumbing to that, which is why the price of crude oil now was first traded in about 2006. But the key thing I want to point out is this recent data you mentioned, supply and demand. I enjoyed putting in my energy outlook is this month, the latest estimates from the Department of Energy is this month in July that the U.S. is consuming about 9 million barrels a day of motor fuel, gasoline, which includes ethanol. I know Matt loves that. Compared to 2019 in July, that's 5% below. And here's another statistic I really like pointing out that really accelerated is Bloomberg New Energy Finance pointed out that global EV sales are now about 15% of new auto sales. Compared to the same period in 2019, it was 3%.
Wow.
Where's that going?
Yeah, that's crazy. And by the way, that's only going up, right? I mean,
exactly.
Who was it? I think I was talking to Fatty B-Roll of the IEA, and he said he expects it to go over 20% this year. So,
but those of us own EVs, I said, there's no way I'm going back. It's just a better way to get around.
All right. Fernando.
I'm going to go ahead and disagree with you there.
There's no replacement for displacement there, Mike. So, all right, Fernando, our good friends down in the Permian, I mean, in other shale areas in the U.S., they're pumping, aren't they?
Yeah, I mean, Chevron just broke their record 772,000 barrels a day in the second quarter. So they're trending towards that 1 million barrel a day by 2026 that they aimed. And Exxon as well, producing significant barrels there. And I think we mentioned last time, but we think the 5 largest producers in the Permian are going to account for nearly 50% of production by the end of the decade. That's Exxon, Chevron, ConocoPhillips, Pioneer, and Occidental. So they are growing. It's just not as fast as that was once hoped. You know, the dreams of us getting to 16, 18 million barrels a day are probably in the rearview mirror.
So what do we do now?
We do about 12 and a half, just under 12 and a half.
Okay, how much do we're net exporter, right?
Yes and no. It depends because we don't have all the crudes that we need, so we import some. But yes, on a net basis.
I think I can go down to Texas, Houston, you know, raise some money from some good old boys and start putting some holes in the ground. And $80 a barrel, I can make a lot of money.
You would.
My cost is like 40, right?
It's a 40 just on the drilling side, but then you have all the. I mean, you're not cheap.
Okay.
And you have to pay for you. You have to pay for your CFO. You have to pay taxes. So your overall fully loaded costs are higher.
Yeah, I'm gonna be a wildcat.
And then you don't get $80. You get a discount on that. And you don't only produce oil; you produce other things.
Hey, Mike, does the SPR play at all into the equation here? I mean, I know that we drained it, to buy votes for the Democratic Party before the midterms, which is, that's what the SPR was for.
Nice trade.
Are we going to fill it back up? I thought the idea was we were going to do that when it was low, and it was low, and we didn't.
There was no hurry to do that if you really compare it to when I was pumping gas at a gas station in 1979 as a gas jockey, and gas price went over $1. We had to price it in half gallons because of the analog tanks couldn't do that. There is a massive excess of supply. If you look at liquid fuels of U.S. and Canada, around 4 million barrels a day. For those old days when the U.S. was a net importer are over. So the only really reason you need the SPR now is for offsetting things like hurricanes and stuff, because we could ramp up that supply even more so if we want. I'm looking at liquid fuel production in this country is basically an all-new high. Include liquid fuels because they have to include ethanol from the farm. That's almost 20 million barrels a day. Our consumption peaked about 15 years ago. So there's a very bad trend for prices, and that's the key thing about SPR. President Biden might go down as one of the best oil traders in history.
All right. You heard it here.
That's fascinating stuff.
Petroleum distribution engineer. That is the term.
That's what the gas jockey is?
That's right.
Were you pumping leaded gas?
Yes.
Was that leaded, Mike? I guess he's stopped listening.
All right. Mike McGlone, he's back out on the pump. Mike McGlone, Fernando Valle, they cover all the energy space for Bloomberg Intelligence. They put it in perspective for us.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or listen on demand wherever you get your podcasts.
Some of these central banks here, we've had a lot of activity, including the Bank of Japan today. I mean, when I look at the ECB, when I look at the Fed, it seems like they're saying we're pretty much done. Is that kind of your takeaway?
Yeah, I mean, we knew that we were close to the end of the cycle, so the question was always, would it take another turn of the screw, basically, to get us into the landing zone for both the Fed and the ECB? And, the central banks are signaling, are reinforcing that they essentially agree with the markets that we're near the end. I still feel that we are currently in the state of, I was thinking of using the term disinflation euphoria, but I think that kind of is a little too pejorative. But more disinflation optimism, because there is, there's reason for it. But broadly speaking, I think that through the course of this whole inflation cycle, the markets and policymakers have underestimated the resilience of the economy. They sort of look through a lot of the demand-driven components of inflation, and people look very much at sort of the subcomponents of inflation, used cars.
I have no idea why
OER
economists ignore. It seems like
ignore
the demand-driven side of it.
Yeah,
I don't get why. Why is that?
Yeah, I think people want to declare victory, and I think the policymakers, everybody wants this to be over.
Well, yesterday we talked with Cam Harvey at Duke, and he said, that the Fed's got it all wrong. It's not 3% inflation. It's like 0.1% inflation. Like he said, the picture is completely skewed by the housing, the way they calculate housing in there. And I think a lot of people agree with him that it's much lower than the Fed expects. Are you worried that the Fed pushes us into a recession by hiking too much?
I'm not worried that the Fed pushes us into recession. I think that it will take a recession, and I don't think the Fed, the ECB, everybody is now managing towards growth. So this is what's new here with this inflationary cycle. As we get closer to the top, they're more, looking at a two-sided view, trying to balance the soft landing that everybody's talking about. And I don't want to. Policy error is maybe too easy glib of a word to say, because I understand what they're trying to achieve here, but to the extent that spot inflationary numbers are showing a disinflationary trend, I think people really underestimate the self-reinforcing elements of inflation. I think we have, I don't want to sound like back in my day, but I think that that the global central bank community, back when they did the new framework and all that, they said inflation, we know how to deal with it when we see it. And, they were kind of caught deer in the headlights. They scrambled to catch up. But I think there's still this tendency to think that to underestimate the forces of inflationary pressures once you unleash them. For example, the nominal spending. I mean, we look at in corporate profits. You look at you have to think in nominal terms a lot here, and you see the corporate America's doing well. Mm-hmm. They're still able to pass the pricing. Is being passed through to the consumers. Europe is a little bit different story. We're seeing obviously more slowdown in Germany in particular.
Recession, yeah.
But I think there are two things that really stand out to me. One is that the underestimating the self-reinforcing elements of inflationary dynamics once it sets in. And the other is that I think people still, even today, underestimate the power of the fiscal impulse that was put into the system. And economists and the central bankers, they don't like to, especially the Fed, they don't like to talk about fiscal policy. Yeah. But we still have there's these things.
It's too big to be left out of the conversation.
It's still feeding through. It's still feeding through into the system.
Paul, this morning as I was driving to work, I was on a call with.
What are you driving?
I'm driving right now. I'm driving an Alfa Romeo Tonale. We're going to talk about that. Okay. But I was on the phone with the CEO of Maserati.
And apparently not paying tolls either.
No.
Should we ask John Tucker? John, what do you drive?
Subaru. Matt wants to jump in. A Subaru.
All right, I'm sorry, I got everybody off track. Sorry.
No, I was just Subaru is a great car. I was talking to the CEO of Maserati, Davide Grasso, and he said they still have inflation. They still feel it pretty strongly in their input costs, right? Yeah. And so they're passing that along to prove your point. The Maserati Grecale Trofeo, which is a small SUV, is going for over $100,000.
Wow.
Yeah.
Yep. Which no problem for Matt Miller. Yeah. All right, Sassan, before you were founded SGH Macro Advisors in 2009, you made your living trading currencies here. So I got to ask you, I got the dollar down, 10% from its high back in the fall here. What's your call on the dollar here? Is there a bearish call on the dollar, or is this just a little trade down?
No, I think there's a bearish call on the dollar. I think, as you know, I mean, it might seem at odds with the notion that we still have inflation, we have more room to hike rates, but you know, we have to look at it. You know, and this is always a tricky part with currencies. You know, to have a dollar call is you got to look at what dollar yen is kind of a different animal than the euro.
Oh my goodness,
and
what happened yesterday?
That. But yeah, you know, they pulled it off very nicely. I think the Bank of Japan. You know, it's people were expecting this to be sort of a huge, you know, explosive event for markets. We had
dollar yen still in the same range that it was, 140, right? U.S. Treasury are still under 4.
Yeah, and importantly, the JGB yields, you know, they went up to like 56 basis points and settled in like the mid 50s. So it's not like they lifted a 50 basis point ceiling and
it went to 100.
And it went to 100. And you know, the reason is, and this is why I think UATA did a nice job on this, is that, and we've kind of been flagging this, that the tactical window for them to do this was going to be at a time when there wasn't a lot of bearish pressure on global bond markets, which, you know, when you look at what's happening in the U.S. and what's happening in the ECB, it was a really nice window for them to sort of to walk in and, you know, and manage it. So dollar call, you know, I think, you know, we're close to the end of the cycle. I don't think we're at the end of the cycle. I think we still have a couple more hikes. You know, I think we have at least one more hike left, you know, for the Fed. And I sort of think that, you know, looking ahead, the central banks might need to, you know, to put another turn on the screw on tightening, because...
Well, Powell said that. He said he kind of warned us about September, right?
Yeah. I mean, September, the markets have priced everything out, you know, for the U.S. right now. And I think that the issue with September is just that it's going to be hard for them to explain or to even want to, you know, press for a hike when, you know, when the inflation numbers are going to are most likely going to come in benign, you know, and markets have been expecting that, and I think there's no reason.
But they can prove their point. He can say, listen, I was telling you all year I want to get to 2%.
Yeah.
3% is not good enough.
Yeah.
You know?
Yeah.
I don't know.
I think that's the broader point, is that both the ECB and the Fed, I think their current stance, I think the you know, putting aside the 2023 numbers, if you look at kind of the 2024 forecast, I think it's a little aspirational, the pace at which that they expect that, you know, that inflation, the disinflationary trend is going to continue. When that manifests itself, you know, I still think the ECB is going to hike in September.
Oh,
you know,
that's
so
a bummer.
Yeah.
No,
Why?
you're no fun. I'm done. I've taken a recession off the table. I'm done with rate hikes. I've got earnings troughing here. I'm set up for a ripping market. That's my call. I'm sticking with it.
I one of the problems for traders has been that I think they haven't been able to square the circle with interest rate hikes versus stock market going up. It can still happen. Yeah.
Yep. All right, Sassan, thank you so much. Sassan Ghahramani, President, CEO, and founder of SGH Macro Advisors. We appreciate you coming in here.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Bloomberg Intelligence. BI-GO on your terminal. Bloomberg Intelligence is the biggest research department on Wall Street, and more importantly, I believe, the best research department on Wall Street. So we have access to all their analysts, including Matt Henriksson. He's a senior equity analyst covering medical technology. He joins us here in our Bloomberg Interactive Broker Studio. And one of the things we like about our BI analysts is they often bring us companies that we never would have thought about, never would have really, you know, think of as an investment. But here's Dexcom. DXCM is a symbol. This is a $50 billion market cap stock. Hit a 52-week high today. It's up 21%. Matt, what is Dexcom and what's going on with this stock today?
Yeah, so Dexcom makes what they're called CGMs. That's short for continuous glucose monitors. And basically this technology is replacing what is antiquated, which is finger sticks, which is you have to prick your finger 3 or 4 times a day to get your glucose reading.
Wasn't there a company that kind of did that a little bit, Theranos or something? Do I remember that?
Yeah, that's a different story.
All right, good. All right, we'll stick with Dexcom.
Same thing though. Prick your finger, get 4 readings a day. That's
Yep.
antiquated. It hurts. It's a pain in the butt.
Right. It's a pain in the finger.
Yeah,
right.
exactly.
Okay.
So CGMs come in. It's on your arm or on your abdomen. It does a reading every 5 minutes. So that's 288 readings a day without pricking your finger. And you get the trends, you get the ups, the downs. It's predictive. So it says you're going to be up, you're going to be down. That's what type 1 diabetes patients need to be able to treat, the highs and the lows. So
it's amazing that it's amazing that a $54 billion company just has one kind of trick.
Yeah.
That's all they focus on?
That's all they focus on, but that's all the trick they need right now because you have 35 million diabetic patients in the U.S. alone.
And climbing, I'm assuming.
Climbing, yes. And we'll get into those type 2 patients a little bit more. But right now, they're only focusing on the type 1s and those patients that really
What's the difference, by the way, type 1, type 2?
Oh, so type 1 is more genetic, and your pancreas cannot create insulin. So you need to inject yourself with insulin to lower your blood sugar. But the problem with taking too much insulin is that you're low blood sugar and then you could pass out or even worse. That's why you need the CGM, or that's why you need to prick your finger.
But that's something that you inherit. That's not something you get from drinking way too much soda.
No. That's when you get the type 2. And by drinking so much soda or eating so many candy bars, your pancreas just cannot produce enough insulin anymore, and it kind of just shuts down because it's overloaded.
And that's the big problem that we're looking at in terms of the climbing numbers, right?
Yes. And so when you see like the climbing numbers, it's mostly type 2, and it's mostly due to these lifestyle decisions of
just eating nerds all day long.
Yep. And sitting at your desk all day long.
Yeah. All right, so Dexcom, this is a way to play that market. And did they have some earnings recently or something?
Yeah, so they reported last night, and their recent product, it's the 7th generation, so obviously called G7. That launched earlier this year, and that's helped boost revenue. So they beat in the quarter, and then they raised their guidance. So now they're up to $3.5 billion to $3.55 billion. That's 20 to 22% growth on a $3 billion revenue run rate. So the market liked that, and so we've seen the rally today.
All right, so in the world of kind of medical equipment, what are some of the hot areas? What are the areas that kind of get your attention?
Yeah, so the big themes in medtech right now is diabetes is one, and robotics is another one. The main company participating in robotics is Intuitive Surgical, ISRG.
Intuitive Surgical. What's the symbol?
ISRG.
Okay.
And so you're talking about a $50 billion company. This is a $100 billion market cap.
You just don't know these companies. Where have I been? Yeah. All right, what do they do?
So they are creating robotic systems that help with various surgeries. It can be anything from general surgery, so hernia repair, bariatric surgery.
A robot is doing this?
Yeah, well, it's so this is where you get your kids to start playing video games.
Oh, I see. Okay.
It's controlled by a video game, or what looks like a video game controller.
Okay.
And so the surgeon uses a joystick essentially to do things in extremely precise ways.
Exactly, and what basically, even when you think about a surgeon, what do they have? They have a very steady hand. But even the steadiest hand by the oh God, I would not want to.
It's a John Tucker.
Yeah.
Paul's hands are too shaky. I knew a surgeon in London. He had to knock back basically a bottle of scotch before he could do any kind of operation.
That's not good.
Yeah.
And this is the guy you went to.
Yes.
He's a friend of mine.
Well, yeah. That's why you should never mix friends in work, right?
So Intuitive Surgical. I wonder if there's any AI involved. I've noticed. We've all noticed, I think, lately that every company seems to be using artificial intelligence. Are you seeing that in any of the companies that you cover?
Yeah, there's it's AI, and it's for medtech. It's specifically machine learning. So you're learning from the past procedures, whether it's surgery, whether it's knee replacements, and you're learning to see what went right, what went wrong. You're learning with these patients how the recovery is. And then you're trying to use those, and you're trying to show the doctor, hey, why don't we try this method next time? And so it's kind of, you're building this big data machine learning aspect to try to really streamline and kind of make the surgery just more efficient.
All right, the 2 companies or 3 companies you've given us so far, they're all up 20, 30% this year. So in the medical technology, medical equipment business, is this just a play that post-pandemic we're now going back and getting procedures done, so your companies are doing well?
Yeah, that's pretty much, you
just
answered it for me.
I can do his job. I can walk into Fidelity tomorrow and say, buy these stocks because people go.
But you know what? The thing, though, is that because of the rally this year so far, this earnings, you've had to have had a perfect report, or else the market's going to kick back. And Intuitive Surgical, for example, they beat estimates, they raised guidance, but in their call, they made one comment that there is slower growth in bariatric surgery, which is just a small portion of their total surgeries. And the reason was that patients are trying Ozempic and other weight loss drugs before going to weight loss surgery. And so that
big competition,
big competition there.
Ozempic?
Yeah, why go under the knife if you can just give yourself a shot in the arm or wherever they get it and lose weight that way?
All right. You're gonna come back and talk to us about Ozempic, Ozempic or whatever it is? I can't imagine.
You got to get me a prescription, man. You
got
got to hook me up.
All right, Matt. Thanks so much for joining us. Matt Henriksson. He's a senior equity analyst covering the MedTech space for Bloomberg Intelligence. And again, terminal users can find all the research at BIGO.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeart Radio app, and the Bloomberg Business app. Or listen on demand wherever you get your podcasts.
All right, let's talk space. Let's talk investing in space. Justus Parmar joins us here. He's the CEO and founder of Fortuna Investments. He joins us here in our Bloomberg Interactive Broker Studio. He is streaming on YouTube. Justus, talk to us about Fortuna. What do you guys do? And talk to us about kind of your investments in space.
Absolutely. So we're an award-winning venture capital firm. We've had a tremendous track record in other industries. We famously made a name for ourselves back in 2016, 2017. That was back when Elon and Tesla were just beginning to take off. It wasn't the star. Tesla was not the star then that it is now. Just to give you context, Elon was selling like 60,000 cars a year. He's selling 2 million cars a year now.
And you guys invested in?
We stayed away from Tesla.
Okay.
But what we did was we realized it was the lithium-ion batteries that were fueling this electrification.
Gotcha.
And so what we did is we co-founded a couple companies in that industry. One went to $1 billion on NASDAQ, and the other one was sold last year for $460 million. So we've had a tremendous track record in other industries. Now we've turned our attention to this new space economy. We believe this to be a once-in-a-lifetime opportunity, and we're so happy to be on the front line.
And so Starfighter Space is the first investment that you're making. Tell us about this company, because not everyone's heard of it.
Yeah, it's a private company. They're located at the John F. Kennedy Space Center at NASA, right beside Jeff and Elon. And so what Elon and obviously SpaceX gets a lot of headlines. And so the secret sauce, what Elon's doing is he's got this Falcon 9 rocket cranking. He's taking it up every single week, and he's focusing on the heavy payload, big satellites, heavy payload. That's what he's got going on. And so for us at Fortuna, we realize there's a void in the market because the small satellites are actually being neglected in a certain way. And technology is actually getting smaller and smaller and smaller. So we've made a $50 million commitment to starfighters to help grow out this beautiful space ecosystem that's starting to emerge.
So small satellites, they're like shoebox-sized satellites, right, that are getting launched in the dozens with these kind of, you have a F-104 supersonic aircraft. How do they launch those? They just fly up to the top and kick them out, or what is their payload delivery system?
You know your
like?
stuff. It's amazing. So so the short answer is yes. Technology is getting smaller and smaller, and so they could be anywhere from like a pizza box all the way to even the size of your iPhone. And they're called small sats, nanosats. And so Starfighters, with our funding, is actually going to get their launch license. So they expect to have their launch license in the next 8 to 12 months. And as soon as we get that launch license, as Paul said, we already have the 9 F-104 fighter jets that fly Mach 2 speeds, tremendously fast, obviously. And if you think about the 9 fighter jets that we have, that's bigger than, I don't know, Switzerland's Air Force or certain countries' Air Force, right? So we've got this as a private company, 100% owned, no debt, and we look really forward to taking this next step in terms of the launch game.
How do retail investors play, investing in space?
Sure, and so it's a bit of a loaded question, but here's what I'll say. I believe that so we've come off the worst market crash in the last 20 years, since 2008, almost 20 years. And so a lot of the stocks have been extremely depressed in that industry, in all industries, albeit obviously there's been an uptick in the last couple of months or so, but we at Fortuna believe that the market's to perform extremely well over the next couple of years. Reason being is there's trillions of dollars of cash on the sidelines. We've seen peak interest rates. We also realize that there's going to be M&A activity galore, and there's a lot, and it's a U.S. presidential year coming up. So there's a lot of really interesting catalysts coming up for the equity markets. We think the market's going to perform well, and within there, space has been a depressed category that we think is going to perform very well over the next couple of years.
So,
sorry.
What I was going to ask, what else is there besides launching satellites? We hear so much about space mining, but I don't think anyone's ever really achieved that, and it seems like it must be a decade away. So what else? I mean, I know Elon Musk wants to go to Mars and put a colony there. What are we talking about?
Yeah, so we at Fortuna, so we're blessed. We've got, almost 30 individuals, 30 folks on our team. These are research analysts, these are investment bankers, CAs, CFAs, all sorts of brilliant people. So we actually get pitched 3, 4, up to 5 times a day from various space companies looking for investment. So to answer your question, Matt, we see it all, or not all, but we see a lot of really, really interesting things coming through our desks. And so I agree with you. I think that the space mining is still maybe 8 to 12 years out potentially, but there are interesting applications such as, for example, solar energy. We at Fortuna are big in solar energy. We've got solar energy investments here in the US, but just conceivably, if you think about it, the sun that we get on planet Earth here, it's actually diluted. It's diluted by the Earth's atmosphere, and we get a very diluted version of the sun. And so if and when we're able to have satellites with solar in outer space, you think about that, it's going to be 10,000 times more powerful, clean sun. And things like this are going to be the future of this beautiful industry that's just starting to come together.
The cord would be so long,
Yeah, exactly. So, I mean, what's the VC world like today in terms of raising capital, deploying capital? We've got higher interest rates. The world's really changed from that free money of just a couple of years ago. How has it kind of impacted your business?
Yeah, so that's just it. The growth stuff has been really, really hurt. VCs are very shy to put money out, although that might have changed in the last 30 days with this AI push. Aside from the AI, it's been a really, really tight industry. A lot of guys are licking their chops because they've financed companies at extremely high valuations, many of which will probably never be seen before. So it's really tricky. But for us at Fortuna, we monitored the space industry. We actually thought it was a little bit too buoyant over the last couple of years with the SPAC craze and some of these things that were going on. We did our homework, and we're actually using this as a perfect entry point, in our opinion, where technology's been the furthest it's ever been, and valuations have actually been the cheapest. We play the long game. We play 5-year, 10-year cycles, and so for that reason alone, it's a tremendously exciting opportunity.
Did you see the congressional hearing the other day?
Oh, yeah.
On UFOs?
Sure, I'm glad they're working on that.
So apparently we have some alien wreckage. It's top secret, totally classified.
Okay.
So why are you saying it? You're just
outing the whole thing.
I mean, that was the big thing about this congressional panel. If we could just get some of that technology, imagine how much you could, supersize the space investment.
Yeah. So I mean, all right. So
just moving along.
I mean, I thought of it because you asked, how does a retail investor get in on space? And my immediate reaction is to type in ETFGO on the Bloomberg terminal. So I do that, and I put space in the description, and then I get ARC-X is an ETF you could use. And so Kathy Wood. UFO is another one. And Rocket.
ROKT, it's hitting 52-week highs. Take a look at Rocket. It's a really nice basket. The stock looks from the bottom left to the top right. General Electric, for example, that's a great way, in my humble opinion, to play it. Obviously, talk to your own financial advisors, not financial advice, but GE was a global conglomerate. They're getting rid of everything, including healthcare, and they're only focusing on aerospace and avionics. And if you take a look at that chart, it's been one of the best performing stocks out there. Yeah. And so that's another low access, easy way to start to look at these things, because the reality is, all the listeners at home and some of the folks, they don't have the chance to necessarily buy the SpaceX's or the Relativities or the Fireflies or some of these private companies that the VC world are currently
Can you buy SpaceX on the secondary market?
Yeah, we ironically, we had an opportunity to buy it back in 2015 at a $15 billion valuation. Obviously, we did not do that. Why would we? Still kind of kicking ourselves. But yeah, we do get offered the SpaceX rounds of financing, absolutely. But what we try and look for, we try and find the SpaceXs before they turn into the SpaceX. So we're not necessarily looking for a $150 billion company. We're looking for an earlier stage company.
Is private space industry, is it primarily a U.S. industry, or are there other countries doing it as well?
It is a global industry. It's a $540 billion global industry. Of that, the U.S. is over $200 billion, so it's almost half of the global output. We at Fortuna believe it's going to $1 trillion industry this decade. It's going to be the fastest growing industry next to potentially AI coming up here, which is one of the reasons we're so excited about this industry.
A lot of those launches go out of French Guiana.
Yep.
Right?
Yep. Went down there once back in the day for one of the when the satellite industry was just kind of kicking off. It was a good trip, actually. Justus Parmar, CEO and founder of Fortuna Investment, joining us here in our Bloomberg Interactive Broker Studio, talking about space, investing in space as a venture capitalist. Lots of opportunities there. S&P 500, there's opportunities right there. It's up over 1% today. The NASDAQ is up 1.9%. So there you go. The market's definitely liking what they heard from the earnings side and liking what they heard from some of these central bankers, reflecting that in the marketplace.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's bring that conversation. Intel CEO Pat Gelsinger. He joins Ed Ludlow and Caroline Hyde on Bloomberg Technology today after reporting earnings. Let's go to that conversation right now.
I want to welcome our global Bloomberg TV and radio audiences. Intel shares are jumping, with investors buying into signs that the chipmaker's long-awaited comeback is underway. Intel is forecasting sales in the current quarter of $13.9 billion, ahead of expectations. The company also notched a surprise profit of 13 cents a share in the quarter just gone, as a slump in demand for personal computers appears to be coming to an end. It's not all good news. Server demand isn't recovering as quickly. The company's still a little bit far from its heyday, where margins were at 60%, sales were nearer to $20 billion. Even so. Joining us now, Intel's CEO, Pat Gelsinger. You know, Pat, this is the second consecutive quarter where investors have cheered the earnings results. Shares are up. And I think before 2023, 10 out of the 11 earnings prints that you had, shares fell. Is this job done for you in the turnaround at Intel?
Well, Ed, we have a long way to go yet. But boy, having two good beat and raise quarters in a row, is super positive and really, I think, indicative of that turning point for the company. But we still have a lot of work to do yet. As we said, our client business is now, healthy footing. We've returned market share to where it traditionally was, a strong roadmap. The market's recovering, inventory levels are good. Data center, we still have work to do, but boy, 2 quarters in a row where we did a bit better than we expected. But we still have challenges in AI. And many of our really good products are only coming to market over the next year. Networking, still a lot of inventory to work through. And our foundry business is still just a seedling, just starting to show some green shoots. So I'll say, boy, far from finished, but it is nice bouncing off the bottom a bit and feeling that momentum in the market response.
Pat, why do you have the confidence to kind of call the end of the PC slump? And also at the same time state that the server recovery is delayed to the end of the year?
Yeah, in the PC side, inventory levels are now healthy, right? Everything that we've seen and a lot of the, issues that we worked through Q4, Q1, and Q2 were over inventory levels by the OEMs and the channel. And now everything is healthy. Our roadmap is very good. We've gained share multiple times in a row. I think we're now at 5 out of 6 quarters where we've gained market share. So I just say in the PC business, healthy. Our position is good. And we're looking forward to the AI PC. And with our launch of our next generation product, Meteor Lake, later this year, we believe that ushers in the AI PC generation. And I've compared that to like Centrino and Wi-Fi, 2 decades ago, a major new use case for why the PC is the best platform. So we're quite excited about that. On the data center side, we still saw that, the inventory levels still persist. China was weaker than expected. Their recovery is going slower. And, cyclically, we see the shift toward AI, these big training machines. Every cloud vendor is shifting their dollars to more focus on that. So those 3 things are leading to a bit longer recovery cycle on the data center. But like I said, we performed a bit better than we thought on the data center in Q1 and Q2. So we're feeling like our momentum and execution is rebuilding despite some of those headwinds that still persist in that area.
For our global TV and radio audience here at Bloomberg, we're speaking to Pat Gelsinger, the Intel CEO. Pat, you're forecasting gross margin of 43% in the current period. But it's a long way from that 60% gross margin level. You know, Wall Street used to look at Intel and say 60%. You know, they would cheer you as a leader in that space. Can you just explain to our global audience the timeline and path to getting back to profit at that level?
Yeah, and we're working our way back in margins, and obviously a nice beat in Q2 on margins, and we forecast Q3 a bit better and Q4 a bit better. You know, and part of it is the cyclicality of the semiconductor industry is brutal on margins. And when we, had an oversupply situation, inventory, that just depresses margins because, the factories cost the same whether they're full or whether they're empty. So you end up with these charges that, burden the price points and depress margins. We also realize that our own product execution has weakened our product position, which doesn't have ASPs as strong as well. So that's another factor. And the last factor here is, the plan that my CFO, Dave, and I have laid out is an expensive plan. We are making aggressive investments to build the capacity to get back to leadership. And thus, we're moving through nodes very rapidly. We said 5 nodes in 4 years. So that causes us to have a lot of undepreciated capacity that we're working through quite aggressively. Also building up a bit more capacity for our foundry initiatives. So all of those factors depressed margins to historically low levels in the first part of the year. And we're just seeing ourselves now working to build back to margin levels, but we're still very confident that as we build our foundry business, get back to leadership in process and products, that those kind of margins, that's exactly what Dave and I aspire to the future. And we feel like Q2 was a good marker, that yes, we're building momentum to get back there.
Thank you for joining us here on Bloomberg Television and Radio Worldwide. We're joined by Pat Gelsinger, Intel CEO. You described the foundry business as a seedling, but every time you and I have spoken, you've hinted that there is a big customer waiting in the wings to give life to that business. What can you tell us about that, Pat?
Yeah, and we're having good momentum. And as I said on the earnings call yesterday, we have 2 big customers in particular that we made very good progress over the last quarter for our foundry business. We did have one, I'll say, confirmatory, not as big a customer, but the Henriksson announcement, their commitment to 18A and our next generation work, with them that we announced this quarter. So I'll say overall, we're seeing good momentum and a really strong pipeline of customers, and we hope to make, meaningful announcements later this year on that. We also pointed out on our earnings call that now we're seeing a lot of interest in our packaging technology. So it isn't just wafer manufacturing, it's also package assembly and test. And Intel has long-term been a leader in packaging technologies. And because of key areas like high-performance computing and AI, there's tremendous interest in these advanced packaging technologies. And we're finding a lot of customer interest in that incremental area of the foundry business as well. So overall, and the numbers were good for us in Q2 for foundry, great pipeline of activities, great progress on a couple of these most major opportunities. So I'm feeling good, like we're starting to really see that momentum build in this new business area for Intel, our Intel Foundry Services.
If we think about what a potential customer might be, at the scale of Apple or Google or NVIDIA, what is it that they want from you? What is it do you think that you can provide them?
Yeah, when I view it, we have to go through 4 stages. One is, are my transistors good? Can they build good products using Intel? Second is, do I have the design tools, the Cadence and Synopsys EDAs and the IP libraries? Have we gotten all of those basics done so that they can design on us? Then third, do we have good terms and conditions? Are they better off coming to me versus, TSMC or Samsung as an alternative? And then finally, are we customer oriented? Can they really have the support? Because my factory becomes their factory. So we have to work through all 4 of those stages before they're ready to commit major businesses to us. And that's why it takes a while. They got to do design designs and tests and pilots and, work through the financials. And, this isn't a mature business area for us. But I'll just say we're making great progress. And in particular, the two most significant opportunities, it was a really good quarter. And I'm feeling very optimistic that, yes, we'll bring them across the line and start to really accomplish what we've laid out, with our, reshoring and building the Western foundry. We also had great success with both the EU and the U.S. CHIPS Act this last quarter, which are affirming the strong support, of the Western governments on this strategy. It's the right strategy at the right time. We're making good progress.
A big part of your smart capital approach. We have to talk about AI. You see a world in which the PC plays a role for localized running of LLMs. But what are the use cases that you see, Pat? The applications where a PC with AI-specific chips is relevant?
Yeah, and, to some degree, they're numerous, Ed. Let's just give one example. In the future, my word processor, I'm going to hit a button and say, give me a legal brief that describes this. And it's going to get locally generated. My video conferencing, my Teams or Zooms, I'm going to say, give me, real-time translation across multiple languages, for this meeting. And I'm going to have that in real time on my PC. My games, for my, all of that is going to become synthetically generated worlds locally on my PC in real time. So we see it across creator, across productivity. And as I've said, this is sort of like a Wi-Fi moment, for the PC of the future. And that begins with our Meteor Lake launch in the second half of this year.
Pat, quickly, a $1 billion pipeline for AI products through 2024. Just give me a sense of the pace at which that pipeline is growing now.
Yeah, we had a super exciting quarter. As I said, we 6x that pipeline in Q2, so we saw a huge uptick on that. And I've deployed a lot more sales resources, software resources, to jump on those opportunities worldwide. When we have our Gaudi 2 chip that is, now in volume, we've just seen the first wafers on the next generation Gaudi 3, which will be our 2024, product, and then we have our 25 and 26 products underway. So, we're seeing a lot of momentum there, and the world is looking for a great alternative, an open alternative, a more cost-effective alternative, and Intel is a trusted supplier. We think this is a great, area for us to put a lot of energy into, and we're seeing the response from the marketplace now.
Intel CEO Pat Gelsinger, we appreciate your time here on Bloomberg TV and radio. Thank you.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I want to get to cars right now.
Oh, there we go.
I'm so happy to be back on this program and talk about the car industry. I've been covering it for 20 years now, and as a result, as you know, manufacturers often give me vehicles to test out. It's the best part of the job. This week, I am driving the Alfa Romeo Tonale, which is a subcompact SUV. It's a very crowded segment, but this one is electrified. It's got a hybrid drivetrain. It has a very tiny gas motor, 1.3 liter, four-cylinder motor driving the front wheels, electric motor driving the back, and it can do more than 30 miles of range on the battery by itself. So it's a very interesting vehicle. Also joining us to talk about Alfa Romeo, Stellantis, which is the owner, as well as the broader car industry, is one of the few people who has driven more cars than me. Bloomberg Pursuit's Hannah Elliott joins us from Los Angeles, and I'm really glad. Hannah, I've been chasing after you for weeks to get you on the show. Thanks so much for joining us. What do you think, as someone who's a huge car enthusiast, someone who loves older cars as well as newer cars, about the Alfa Romeo brand, the Alfa Romeo story?
I mean, first of all, thanks for keeping on the chase. I'm so happy to be here with you, Matt. Second of all, what's not to love? This is a 100-plus-year-old brand with real racing history. It was winning the Targa Florio in the early 1920s. Of course, we have, famous Alfa Romeo movie cars like the little Spider and the Graduate, of course, that everyone knows and loves. It's got real history. It's Italian. Who doesn't love Italians? And it's owned by the largest car brand the fourth largest, car brand in the world, Stellantis. Like you said, there's a lot going for it. I actually like how even the modern cars look. I think they look distinctive. They look interesting. And they're pretty well built. They've got some great specs. They're competitive within the market share. But my caveat is, for whatever reason, Alfa Romeo has really struggled to gain real momentum and real ground in the U.S.
It's very true.
Yeah.
I looked at the stats, and last year, Alfa Romeo sold 12,845 cars, which is very little, right? BMW sold more than 330,000. Mercedes sold more than 340,000. Tesla sold almost 500,000 cars last year in the U.S. market. So my question is, why doesn't Carlos Tavares, why doesn't Stellantis, it's a $60 billion company, invest more in this brand? Listen to what Tavares told us on Wednesday.
Alfa Romeo is a big success. Since Stellantis was created, we made a huge turnaround of the business model. It's now a highly profitable brand. It's a growing brand, 60% volume growth on the H1 2023 compared to last year. So it's growing, it's highly profitable. We have turned around. We are happy to be in Formula One, and we are going to increase our presence in the US, including at one point in time.
So it's interesting that they're getting back into racing, Hannah, and I'm sure that's key for an enthusiast like you. But the problem for me is not only, this car that I was test driving is front-wheel drive, which is already, forget about it for me.
Really?
Yeah, I mean, that's just not my thing. But for some people, it's a great vehicle because it's
good in the snow. Good
electric range. It has, I guess it's okay in the snow, and you could also take longer trips with the motor. But my problem is it breaks down so much. In J.D. Power's initial quality survey, they showed 204 issues per 100 vehicles, and that's only the first 3 months. So in the first 3 months, every owner essentially has more than 2 mechanical problems. That's something that they have to fix.
That's just completely untenable, and unfortunately, in the U.S. especially, that has been the existing reputation for Alfa Romeo, so much so that it's kind of a joke, even for people who really love the brand and who collect the old cars and who want to buy the new cars. That is just the sticky reputation that they have. And, of course, Tavares is saying they're pumping money into it and it's successful, but he's talking on a global level. In the US, Alfa Romeo has had a very spotty history. Let's not forget they were dormant and didn't sell any cars here for several decades. In 2016, they sold fewer than 600 cars for the full year in the US. These 12,000 that they've sold last year were down from the previous year, and this year they're on track to sell even fewer. They're probably going to sell around 10,000. So in the U.S. specifically, you're right. When you think about Alfa Romeo being in the same competitive set as Audi, BMW, Mercedes, even Volvo, even Jaguar, there are a lot of options. So when you're having reliability problems, it's an automatic no-go.
It's too bad because the Giulia and the Stelvio apparently are amazing performance cars, but if they break down, that's kind of a deal breaker. Also, Hannah, I was joking with you, and you pointed out that everybody made the same joke about the new Ferrari SUV. It kind of looks like a Mazda SUV. This Alfa Romeo Tonale that I was test driving looks exactly like the Dodge Hornet. I think we might have video of the Dodge Hornet. The reason is that they're essentially the same car. Dodge saw that Alfa was making this. They wanted an entry into the subcompact market, so they just stole it, being a sister brand, and changed a couple pieces of sheet metal. But it's $10,000 less, and I can't imagine why anybody would want to pay more for the Alfa when you could get the same car as a Dodge for so much cheaper.
Okay, this is where we may disagree, and in a good way, because I feel like you really understand the paper. The paperwork says the Dodge is the better buy, but I still am a little bit shallow, and I like this sort of Italian cachet that Alfa Romeo has, even though all the things we already know about Alfa Romeo. To me, it does at least have this sort of Italian luxury cachet. So I'm going to still probably go with the Alfa Romeo over the Dodge. I also think the interior of the Alfa Romeo looks a little more interesting than the interior of the Hornet. Tell me if I'm wrong, but that's my take.
I think you're probably right. By the way, the good news is I went on a call. It was way too early for you, but this morning at 6:30 a.m., Maserati CEO DeVito Grasso had a conference call, and he said they have poured money into the quality issues to try and fix. Obviously, it's a very different brand and a different segment, but they're still both owned by Stellantis. He said they're going to try and fix the quality issues there, and they've made great headway.
I mean, I'm glad to hear it. I do think perception lags behind reality, so it may be a few years before the public consumers pick up on this improvement. And I do think, Alfa Romeo hasn't been marketed strongly in the U.S. the same way that Audis are marketed. So some of it could just, if they keep throwing money at it, we may see some growth. Who knows?
All right, Hannah, thanks so much for joining us. Hannah Elliott, staff writer for Bloomberg Businessweek from Los Angeles, talking to us. A little car talk right there. Why not?
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.